I'm Brent, and this is Greg. I'm a real estate agent here in Prescott, and Greg is a lender here in Prescott. We're both local here in the community to serve you with all of your real estate needs. Reason we're here today is to bring you the latest stats on the local area. So we're going to talk about Prescott, Prescott Valley, and Chino Valley. Talking about real estate market stats, and then we're also going to cover what Greg's seeing on the mortgage side of things, and we're going to debunk some of the latest real estate headlines. So stay tuned till the end for that. And you want to say anything?
I like debunking. Let's do it.
All right. So let's dive into the stats first. We've got some fresh stats hot off the press. As you saw, it was just running in. Prescott, Arizona. So let's talk about that first. Home prices. In June, so last month, we saw a median average sales price of $586,000, which is actually up $16,500 from the previous month in May, which was at $560,000. And that's down from July of last year. So a year ago, we were at $612,000 as the median average sales price. You got any thoughts on that?
Well, I think what's really interesting here is from May to June, we've seen almost a 3% increase in home prices. And even looking at the peak of last year or from July, we're only down roughly less than 5% overall. So I think that's a big indicator of where we're headed as far as the median prices are going to continue to grow, even though, we saw it relax a little bit for the past 12 months.
Mm-hmm. I'd agree with you on that. Typically when we see prices go up, it's because inventory comes down, but that actually hasn't been the case for us here in Prescott. Let's dive into those numbers. So as of last month, June 2023, we're at 504 active listings on the market. We're talking about single family homes. In May, we were at 411. So we had an increase, quite a bit, significant increase in the number of listings available on the market for you to choose from if you're buying. If you're selling, that's more competition, unfortunately, that you're going to have to sell against. Comparing that to last year in August, we saw a peak of 483 listings on the market. And after August, it started to cool down a bit and inventory started to come down. So 504 as of last month, which is higher than 483 in August of last month. Greg, what are your thoughts on inventory rising?
Well, you have a 20% increase in this month. That, of course, I think you nailed it. We're going to see more inventory for people to choose from. Mm-hmm. But I think the next stat really talks about how hot the market still is, even though there's more inventory. Looking at 26 sold in the median price range.
Yeah,
that's huge.
Yeah, so we had a total of 26 sales in the $500,000 to $600,000 price range, which is our median price range here in Prescott, Arizona. Fun stat on that is the average sold to list price. So we're talking about what the house was last on the market for versus what it closed escrow for. Was most buyers were getting a 2.3% discount on the price of the house still. So inventory's up. Sellers are given a little bit of a discount here in Prescott, but we're seeing home prices climb.
And what you're seeing in that discount, what Brent's saying there is, you're getting about on a $600,000 purchase, there's about $12,000 that the seller is mm-hmm. willing to give to the buyer, maybe in reduction of price, or maybe on the backside for closing costs or buying rate down. A lot of flexibility there.
Yep. And another thing is that being that this is an average stat on the lower price ranges, so anything below the median price range, so anything below 500,000 right now, we're not seeing sellers give up much unless it's a house that's distressed or been on the market for a while. There's actually some bidding wars going on, and you've seen some of that, right? In that sub 500 price range.
Yeah, a lot of multiple offers, have to be competitive there. As a lender, we're calling the listing agent and talking about our buyer and how good and prepared they are, and mm-hmm. grade A, good credit. They can do all these things, but I'm not seeing a lot of wiggle room, especially in those lower end prices. $250 to $450, somewhere in there.
Yeah, I'm kind of seeing the same thing. So, but when you start to get in the higher price ranges, you're looking like $800,000 plus. Those sellers are more willing to negotiate on the deals, just because the buyers in those ranges are more fewer and far between than they have been. So I would say that the discounts on the higher priced houses are what's driving this average discount, rather than, you're not getting discounts on the the lower range houses, when you're having a bidding war, it's the exact opposite.
Yeah, and you're looking at those higher end houses sitting on days market longer, right? Because it takes longer for those larger homes to come up with funds and people who qualify to buy something so nice.
Yep. So that's your Prescott stats. Let's dive into Prescott Valley stats for June 2023. We're looking at average sales price of $470,000, which was up from May at $453,000. And a year ago, it was actually $425,000. So Prescott Valley has seen kind of the opposite of Prescott. It's been up over in Prescott Valley since, July of last year, 425. Now we're at 470.
I mean, that's over almost 11% increase in that from last year. And you're looking from 1 month, that's a 5% increase. So way to go, PV.
Yeah. If you got a house in PV, your home values have been going up. And I think part of this is the contributing factor to this is actually going to be the number of listings. So we're seeing less listings on the market in Prescott Valley than we are in Prescott. Let's dive into that. June, we had 213 listings on the market, which is up from May at 184. So we are still seeing inventory increasing in Prescott Valley, but we're still low on inventory. Last September had the highest number of listings in Prescott Valley at 303.
I think what's interesting too, and why you're seeing Prescott Valley values increase, is because people are getting outpriced in Prescott. It's so expensive. Yep. So they're like, well, what's my next best option where I can still get to Prescott and still have community that's like Prescott? We're going to go to Prescott Valley and buy. And that's just helping the values increase. What do you think, Brent?
I think you hit the nail on the head with that, because looking at the stats, we had 18 sales in the $450,000 to $500,000 price range in Prescott Valley. And nice. That's just the price bracket right underneath where Prescott was at for the most number of sales. So average sold to list price right now in Prescott Valley is 98.7%. So what that translates to is if you're buying, on average, getting about a 1.3% discount, which isn't much.
And less than Prescott's giving. I mean, less than Prescott's giving.
Oh, yeah.
Up. So it stands to reason what's on the market is what you're going to be paying for, and there's not going to be a whole lot of give and take there based on these stats.
Yep. And that's your summary for Prescott Valley. Let's dive into Chino Valley, which is a little bit of the same of Prescott Valley, but maybe magnified a bit more. So let's dive into average sales prices. You're looking at June 2023. The average median price was $442,000, which is up from May of $425,000. So that's quite a bit of a jump from May to June in the average price point. And then in July of last year, so a year ago, it was at $390,000. So a year ago, $390,000 to $442,000 last month. That's a big jump.
Almost 15% increase.
Yeah,
in value.
That's a big jump. So yeah, if you've got property in Chino Valley right now, your property values are going up.
And I think the same thing's happening, right?
Yep.
We want to be in Prescott, but we can't afford it. So what's the next best thing? Maybe we want a little bit more farmland or rural life, and they go to Chino.
Get an acre or two. Mm-hmm. Have a little bit of room, a little bit of elbow room there to spread out a bit.
Little want pick the fence, get some dirt.
Get a horse or two. Nothing wrong with that. Continuing on with the Chino Valley stats, number of listings. So this also plays into why home prices are going up in Chino. As of last month, June, we were at 77 listings on market, which was up from May at 69. I mean, a whole 8 listings, right? Which doesn't sound like a whole bunch, but when you're looking at a total number of listings at 77, that's more than 10%.
Yeah.
So yeah, we a 10% jump in inventory over there, but they're still low on inventory. September of last year had 113 listings on the market in Chino.
Wow.
So we're still under 100 listings on market in Chino right now. You want to take a guess at what the average price range was over in Chino?
Well, seeing as everything is, somewhere between 450 and 600, I'm going to say somewhere in there.
Yeah, actually, same price point as Prescott.
That's really
which is interesting. Yeah, $500,000 to $600,000 range. In Chino Valley last month, there were 10 homes that sold, which was the highest number of sales for the price bracket.
Interesting.
Yeah. So It's interesting though, because that's the price bracket most people bought in, but the average price was still at 442,000. And the reason being is that there's some manufactured homes out there and there's some lower price properties out there. So
Sure.
those are going to skew the data lower versus being in Prescott, right? And the average sold to list price out there in Chino Valley right now is 97.8%. So what that translates to, buyers on average are getting about a 2.2% discount off of the list price of the home.
About 10 grand, 10 to 12 grand.
Yeah. So that is a summary of our stats. Obviously, that's what this market update's all about, is going over the local statistics with you. And let's talk about lending. Greg, how's everything going in the mortgage arena?
Well, I think you have an article we're going to debunk here.
Yeah, I do.
And I think that's a good
dive into that?
segue. Let's just do that.
All right.
If we look from December to today, we're seeing applications increased by 25 to 30% since December of 2022. So I think most people who are going to buy because they have to still live life, get married, have babies, upgrade, downgrade, someone dies, divorce, all that stuff still happens, right? So I think where we were, people are just relaxing and like, okay, life still has to happen. I don't really care where rates are. We'll figure this out so that we can live somewhere, because we love Prescott, we love PV, we love Chino. And so they're finding a way to make it happen. Mortgage demand drops to lowest level in a month as interest rates rise. This is the thing we're debunking here. And
yeah, it's a headline on CNBC. So this is national news headlines. Yeah. This isn't Prescott Times headlines. This is national news, what's being spread to everybody out there right now. So, and there's a lot of fear going on. You got to think about it. These big national media companies, they get eyeballs and clicks by spreading fear. So that's kind of what is written into this headline, I think.
And you have to read this: lowest level in a month. Well, I don't see that. My applications are still the same amount as they were last month. So
good to know.
I think we are insulated from this because we are such a specific demographic, that people, it's a desirable place to live. Look at what we got. We got 140 miles of mountain biking, hiking trails, 300 miles of double track where you can take your Razor or your quad and go. It's just an ultimate outdoor town. And then you have all the horse properties, all the horse trails. You have the lakes. I mean, this place is awesome.
It's not 115 outside.
Well, yeah, it is not 115. So I'm not seeing these national fear headlines.
Not locally. Anyways.
Not locally.
Yeah. So we're not seeing that here locally. Mortgage rates. What have you seen mortgage rates doing over, I would say, the past 2 to 3 months?
Whew, buddy.
Up and down roller coaster, right?
Buddy. Volatile, super volatile. We have these weeks where it's in this channel and we'll see rates just kind of go up and down, but in a specific channel, right? Mm-hmm. And so that means it's going up and it's going down, but it's not leaving to spike.
Yeah.
But it has spiked, and it kind of leveled off in May, and then it took a hike, and this week, this past 30 days, it's kind of been in this channel. And the past 2 days, we've seen interest rates increase. Mm-hmm. There's a lot of factors that we don't understand fully. Even the analyticals or the analysts are saying, by all the numbers, we should be heading in the other direction with interest rates. What else is going on? What else aren't we seeing? So I think we just have to hang in there. It's coming within the next 6 months to 2 years.
Yeah.
But when is that going to happen? We don't know.
Yeah. Well, I remember the analysts and experts back in April were saying that once CPI came out in May, they were expecting mortgage rates to follow because CPI, well, we're going to geek out here for a minute. If you're not familiar with these terms, drop a question in the comments where you're watching right now. But CPI is what? Consumer Price Index?
Yeah.
So that's talking about inflation. So we're talking about inflation numbers in May that came out in May, actually came out, 1.1% better than expectations.
Yeah.
So they came out better than expectations, but pretty much right there in that ballpark. And the experts are saying if they came out like that, they were expecting mortgage rates to decrease, but we haven't seen that since that was May 10th. So
it's going the opposite way.
Experts don't know. We don't know. No one has a crystal ball. Even the smartest people in the world that's talking about mortgage, like Harry Habib and some other experts like that, none of them have a crystal ball. So
the last time I said I don't know why the market and the bond markets and the interest rates are reacting the way they did was 2020, when rates just dropped like a rock.
Yeah,
we all didn't know what was going on.
Yeah,
it feels that similar way. I'm not saying I have fear in this. I mean, people are still going to buy, and it's going to affect some people, but overall, you have to live somewhere.
Yep.
And I think that's the real key is there are other opportunities to look at different options.
Yeah.
To lower the rate, maybe 2 to 3%, using what the sellers are going to give you in that 2.3% or 1.5% in discount we were talking about earlier.
Yeah.
So we can prepare them for that and then move down the line.
What if someone just sucked it up and took the rate at today's rate? How long in, say, let me ask two questions. The first question is, what's the time frame before they can refinance that loan? Is it 12 months? Is it 18 months? Is it 24 months?
Yeah, so Fannie Mae, Freddie Mac put in a rule stating that you have to hold that for 12 months.
Okay, so a year. So if rates drop, so if you say I locked in a mortgage rate today at today's rates, and in a year from now, rates were 2% lower, I could refinance at that point and drop my monthly payment.
You certainly could. As long as we have enough equity in the house.
Yeah. Okay. So that's something to think about. If you're scared of today's rates, you can lock in so long as you can make the payments. We're not going to advise you to do anything that's outside of your budget or outside of your means. We don't want you to be house poor.
No.
But just keep that in mind. You can lock in a house at today's prices with the higher rates and then refinance that in 12 to 24 months, whenever rates do come down, if they come down. Obviously, we can't guarantee that that's going to happen. But what's one thing that I can make a prediction on is that when rates come down, what's going to happen?
Oh, there'll be more buyers to the market.
And what happens when more buyers jump in on a limited number of homes?
Multiple offers, competitive situation, prices go up. That's a challenge.
Yeah, prices go up. So that's the thing is if you lock in a house at today's price, when you go to refinance, you don't refinance for a higher principal amount. The price that you've locked in and your principal that you've locked in today is actually it'll be less because you've made payments.
Right.
So yeah, your home price isn't going to go up when you refinance. Let's just say for generalities, right? Because there's a million different things that you can do that Greg could help you with, with pulling out equity, so on and so forth. But you can talk to Greg directly about that. I'm just saying that you can lock in today. If you buy a house, you can lock in today's price and a higher interest rate and refinance that interest rate down the road if interest rates come down. But you can't change the purchase price. So if you go to buy a house in 12 to 24 months and the interest rates are, say, 2% lower than what they are today, you're likely not going to get today's price for that house. You're going to have to compete with other buyers, and you're probably going to pay, no one's got a crystal ball, but I'm just saying you're going to pay more.
Well, I mean, we've seen that in the month-to-month numbers that it's been up, 5, in some cases 15% year over year. We had a slight dip, but we've already proven that even in a down market, we're seeing home values increase. Yep. So it just drives your point home.
Yep. So long as more inventory doesn't come on the market, which likely it will, because I know some buyers personally who are also sellers, right? They're people. They're like us. They have primary residences that and they have homes that no longer fit their needs, but they don't want to jump into the market quite yet. So those clients are going to be clients that are going to sell their house in order to buy another one. So those type of clients that I have, they're going to be putting a house on the market, but then they're also going to be taking one off the market.
Yeah.
So it'll be a 1-to-1 on that. It'll break even. But let's talk about the next article, which is there's some fear going around about Airbnbs and how there's an Airbnb crash coming and how that's going to flood the market and housing prices are going to crash because of this. Let's kind of dive into that for a minute here. Let's share this article.
Well, I think a lot of things have to happen here, right? Because right now, if you look back 33, 34 years ago, There was a small baby boom that's going to last about 7 years. Guess what that was? The first-time home buyers' birth rates. Go back and look at the charts, or DM me, and I'll send you the charts. That has to be significant. There's a lot of first-time home buyers coming into the markets. So it's going to have to be substantial for this crash from Airbnb to happen.
Yeah.
Guess what else is also on the market? You have landlords getting great rents.
Yep.
They're not selling because occupancy is so high. It's not bringing more value, more homes to the market. So this Airbnb thing really has to be significant to crash to affect the numbers. Yeah. I just don't see it happening.
My take on it is that if Airbnb as a company, say them and VRBO, that whole market were to collapse in on itself, meaning nobody is renting those out anymore, how many of those investors are just going to turn them into long-term rentals?
Right.
Like the way these articles are being written about this Airbnb crash is saying, is assuming that every single Airbnb is going to be put on the open market to be sold as, as a property to be bought. No, investors are way smarter than that. They're not going to be like, oh, Airbnb is not working, let me just sell it on the open market. No.
Let's say they did. Good. I have so many buyers in my database from people like you, Brent, that are waiting to buy.
Yep.
They're gonna be absorbed. I don't see this a problem. Good. Let it go.
Yep.
I have an Airbnb. It hurt my feelings. But good.
Yeah.
There are a lot of people that want to buy.
Well, with your Airbnb, so just speaking from your own experience, if you were to get no more people coming through the door for your Airbnb, which is not a realistic expectation, right? I mean, these charts that I've seen, I don't have one in front of me, but I've seen like a headline being, Phoenix is down 50% on vacancy rates or occupancy rates, right? So down 50% means that they're getting half the people to rent it that were renting it at one point. Correct me if I'm wrong, or actually, let me just ask you, compared to what you would normally get for a rent on your Airbnb if it were a long-term rental, what would you say in terms of 2x, 3x is your Airbnb income versus what your normal, what that property normally rent for? Like 2 times, 3 times?
If you're looking at overall a year, I would say it's 2 times what you're going to get in net.
Okay.
Yeah. So you could rent it for $1,500. You're going to bring in about 3.
Okay. So if your occupancy rate gets cut in half, what does your $3,000 do?
Gets cut in half.
Which is the same.
You're still making your payment, or a long-term rental.
That's the point I was trying to get at.
Yeah.
Right. So you're going to see even these people that are getting 50% vacancy rates, or 50% of the occupancy rate that they were getting, like Greg. If it goes down to 1,500, that's still they're still making money. It's not like these houses are just sitting vacant, smelling like whatever, right?
And they're not being abused by a long-term renter.
Yeah.
They're being cleaned. And so what if they're 50%?
Yeah.
They're still making the payment. They're still building equity, and the house isn't being abused. So I don't see people just walking away and saying, oh, I'm going to get rid of my Airbnb because I'm down 50%.
Yep.
I don't see it. I could be wrong.
Well,
and I have been wrong.
Yeah, but you are a real human being who is an investor who has a vacation property.
Yeah.
You're not somebody who's just looking at numbers and then spewing out what their thoughts are. You actually have experience. You have skin in the game on this.
I do.
So
I do. Yeah.
Take it from someone who has skin in the game on Airbnbs, right? Like about what's actually going on. So let's dive into our third headline here real quick. And bear with me here.
What's the next headline we're looking at?
U.S. housing market defying crash expectations as supply shortage keeps prices high.
Well, I think we've kind of just went over
we
that
we talked about that.
All of that. I think looking at the Prescott area, and then and just looking at rates and even the Airbnb data that we just shared a moment ago. I think all of that stuff still plays into this. We still don't have the supply chain we need and of affordable housing for folks.
Yep.
It's just not there.
I feel like this headline is kind of, helping them justify that the previous articles that these big news conglomerates have been writing about housing market crash coming, the market's crashing, housing
Like this is an
crashing.
offset. This
is like an offset saying like,
Yeah.
oh, well, we didn't expect that, it's market's defying the crash expectations. We expected it to crash, Greg, and it's not crashing. It's the supply shortage. It's not that we were wrong.
Yeah.
It's the supply shortage.
Yeah.
We've been in the business for a long time, and and I've been seeing it since COVID. Like, yeah, we had a huge supply shortage after COVID, and we've still never recovered. We don't talk about it too often on the out-facing side, talking to, y'all as the consumers and as the public about it. But we have a stat that we look at regularly. That's we call it the supply stat, right? We're looking at what's called months of supply. So in real estate, if we have enough houses on the market to supply buyers for 5 to 6 months, or 5 to 7 months, of inventory, meaning that, think about it this way, on average, one buyer should have 5 to 7 houses to choose from that they're not competing with another buyer on. If that's the case, then we are in what's called a balanced and healthy market. I can't remember the last time I saw 5 months of inventory before COVID. Even with the
2010,
right now,
it wasn't even balanced.
No.
So, I don't know.
Yeah. And even with Prescott being over 400 now, I did run that number and it was at like 4.2 months of supply. So we're creeping closer to that equilibrium point, but we're not there yet. So based on the numbers, technically, we are still in a housing shortage here in Prescott, even with the inventory being up.
Which drives prices.
Which drives prices up. So that's why we're still seeing prices go up, but we are seeing discounts on houses, and it's just, anyways, we went through all the data on that. I'm not going to dive back into the data.
Rehash that.
I could get stuck in that for an hour.
Right.
So, but yeah, those are some of the headlines we wanted to go over with y'all. We just wanted to let you know how national headlines are affecting or are not aligning with what we're seeing here in the Quad Cities area. So I think that's a wrap on our market update. Thank y'all for joining us. Greg, do you have any final thoughts to share?
Well, keep it classy, Prescott.
And we'll catch you all next month. Remember, first Tuesday of the month is when we do the market stats here live on the Prescott Times. Thank you so much, San Martin Rodriguez, for allowing us to come onto your platform and to share the news.